Okay, guys, so welcome to this video analysis where we're going to have a look at the pound against the US dollar in today's market. So Brexit headlines are pushing the pound higher. Markets are expecting the UK and the EU to be able to agree on a trade deal and overcome the stumbling blocks of fisheries and state subsidies that's been holding up the talks at the moment. But clearly the price action is showing you that the markets are betting that a deal will be agreed. Now we have to remember the pound is still undervalued for where it was trading back in 2016 because of the uncertainty if the UK can sell to their biggest trading partner, which is the European Union. The UK sells 56% of all its exports into Europe. And that basically means the pound has been undervalued because investment has been held out of the UK for over 2 years because of the uncertainty around will companies be able to sell to Europe without increasing their taxes on these sales. That would make their items more expensive for European consumers and less likely that European consumers will then buy UK goods and they'd rather buy it from somewhere else in Europe without having to pay the excess taxes. And you can see this if you look at the UK stock market over the past 2 years. It really has not moved. Wait, let's get it up again. UK 100. If you look at the UK stock market over a 2-year period, the stock market has literally remained flat. And you can see this here for 2 years since 2018. It hasn't made any new highs compared to, let's say, the S&P 500, the US stock market, which over the past 2 years was continuously moving to the upside. So that's showing you that the underinvestment in the UK has caused the pound. If we look since 2016, the pound is still trading at a lower value than when we were trading in 2016. You can see this as where we're trading right now. So if the UK and the EU can agree on a trade deal, this basically means the UK becomes more attractive because investors can buy UK companies at lower prices in the stock market because they're going to have access to the European market without incurring taxes. And this demand for the pound will cause the pound to rise. And we can see within this channel, the pound has continuously edged to the upside and is continuously now making fresh highs in this recent trend here. If we get back above the previous high, then we can clearly know this trend is in full swing. And analysts are saying the pound can go up to around 140 or 144 or around 145 if there is a Brexit deal. So the momentum is clearly with the pound against the dollar. The dollar is also getting weaker because of lower interest rates now relative to other countries. And if we're going to take this trade, what we can do is we can get a buy position above the resistance level of 135. That could be an entry price. Or if we're going to buy now, we just have to know that a 1-month volatility is around 4.35%. So this means on an average basis, going back over the last 5 to 10 years, the pound has moved around 4.3% on a 1-month basis. So if we're going to hold this trade, it's going to be a long-term trade. So you want to give the markets the room it needs to fluctuate throughout the trade, and a 1-month ATR is 4.35%. So that's when our stop loss would be around 128, and we can have a take profit target of around 1.45. And of course, once we start getting our profit target of around 4% to the upside, then that's when we can start to move our stop loss higher and lock in some of the profits, or move our stop loss to our break-even price and where we entered the market once we're in the trade. So let's see how this progresses. Clearly, the momentum's with the pound at the moment because of the Brexit deal expectation. So this looks like a good buy at the moment in the market. So there we go. The pound against the US dollar. Let's see how this plays out. The fundamentals are driving the pound higher, and this should continuously play out should we move closer towards a Brexit deal this week, as they need to agree on something at the moment. So you can clearly see here we're making higher highs, we're making higher lows, and this is clearly identifying you that there is a trend in the markets, and the markets are confident of a Brexit deal being agreed. So there we go. Higher lows, higher highs. The market's trending higher. Brexit headlines are pointing towards a deal. So we should be looking to get in and buy the pound against the dollar. Thank you.